Hey everyone, just doing a sound check. Let me know that you're hearing this. Yeah, what happened was a Windows update came in. Let me know if you're hearing me before I start talking here. Okay, awesome. Thank you, AJ. Yeah, so what happened was I reboot every time I do a show, and there was a Windows update. And the first thing they said, this could take a while. Your machine's going to restart several times. And that was 30 minutes of waiting time. I did it about 10 after, thinking I was going to be all ready. So anyway, thanks for everything, and thanks for saying that I must have been busy. I'm just, yeah. Anyway, a lot to go through today. I usually have an opportunity to get my head into the game a little bit, so I was unable to do that because of not being able to do some stuff. And I have a guest I'm going to be bringing on today, and I said I'd bring him on at 11. So I've got a bunch of stuff that I normally would have done. So just go ahead and, yeah, and the audio's not coming through. I don't know if Windows made some changes, but it looks like you guys are hearing me. It's not normally how things come through. So we'll just see how it all goes. I've got a couple things I have to do here. So watch the screen, trade for a minute. We're trading at the highs of the session here, and you know the anticipation of the Fed can't be misinterpreted. You know, we're trading right back up at the EXT on the grid for today. So give me just a minute. I will be back on. I've got I've got to set up a Zoom meeting for Charles to come on and then make sure we got everything going. So just bear with me. Just give me 3 more minutes. Let's just say we're going to start within 10, 12 minutes. I'll come back in and do some preliminary stuff. Thanks a lot. Hang in there just a couple more minutes, folks. Just about ready to start. Yeah, keep chatting, folks. About 3 more minutes. Should be all set. Okay, folks, we are getting ready to go. And yes, WaveTech did catch Kodak. Bought it at $2.20 on 7/22. So don't miss a trade, folks. This is it's a powerful product, and you have to have it on your radar screen. And if you had it, I saw somebody mention in the timeline that one of their buddies got it. And yeah, it's a big trade. This doesn't. This just reflects as of yesterday. So anyway, welcome. Thank you for coming to the live stream, and we're going to go through a lot of details today. I do have a guest coming in. Charles Cottle, who is one of the original founders of TOS, is coming in and be talking about some option strategies and some other things that are going to be going on as far as uh, going forward trying to collaborate with him in helping folks to use our product to make more money and all that good stuff. So we'll start off where I normally start. I did, hopefully Charles is watching, and we're going to be delayed about a half hour. If not, text me if that doesn't work for you. It's just because we're just getting started here about a half hour late. So, like I said, I appreciate everybody's patience. And as far as the markets go, well, we're trading up at the AXT for the day. We'll take a quick glance at the S&P, and we're trading at 39.40. 40. Let me go to the cash here so we can get to the right place. And so the XT today was 3245.76. We printed 3250.64. A lot of overnight interest came in. They started to bid the market right into the London opening last night, and they've just continued it on. So they're waiting for Jay Powell to come out. Guess we'll have the announcement here in just a few minutes, so we'll be able to hang out, watch this reaction, and I'll go to the short-term screen to talk about that. Yeah, the other thing, which is one of my biggest frustrations, we've been trying to get these cryptos on WaveTech. We had an amazing buy the other day and I'll show you, and we'll go through Bitcoin here in a little bit. We had a great buy, and I believe we've got 80 or 100 cryptocurrencies coming into this thing. We've got one last glitch to work out. Once we get that done, we should be able to get this thing up and running. So if you're a crypto trader and you want to take a look at the WaveTech platform, then please do it. It's open, so you can subscribe and cancel if you want. There's no contracts, nothing, no handcuffs, and we'll do our best to make this thing as profitable for everybody. And there's a lot of folks that are already using the product, having some amazing success. And we're now teaching you how to build portfolios and build your own personal mutual funds, all kinds of things like that. But the markets themselves have continued to see this contraction. I've been talking about this on the channel. We're seeing this contraction of volatility on a daily range, and it just gets smaller and smaller. I'm going to blow this up just so we can see just you can see how narrow this range is. And we're back to this point where we've contracted to about 18 handles average per day. Now the market grid actually adjusts itself over a short 3 and 5 day look back. So it's constantly looking at what the ranges are and then figuring out where the key points intraday are. And what we've seen so far today is the range is gotten so tight, it's going to be easier for any kick up in volatility to get above that. So the danger of today, and those of you that have been watching the market grid know that if we get a close today above the EXT number, that's going to tell us 2 to 3 days downside. And the big pivot number, nothing's really changed other than what we're seeing here on the markets is this continuing choppy sideways range. I mean, we're not going anywhere. I don't know if you folks have noticed, we've been bouncing between this high end of the high print last week, I believe, was 3279.99. And I've been talking about 3280 being a major pivot. It still is. That is the pivot number. We're very close. If we'd have closed lower today, which we could still do, depending on what Paul says here in a few minutes, we could see an exit of this trade that we've had on since going back to, go all the way back right here to May 4th at 28.42. We've been on this trade for 2.5 months, and it just continues to kind of grind out. And we're very close to a point where we could see an exit here, and I'll talk a little bit about the database here in a minute because I still think that's the primary consideration that you have to have from the standpoint of what's going on with these markets and looking for a rotation. I've been talking about it for maybe 2 weeks now, and the database continues to hang on as well. But sticking to the markets here, this contraction of volatility, we've actually normalized things, and I don't know if you folks have noticed this, but it's really it's really the normalization of the market. People don't seem to be as excited about the markets that they were. There's the volatility slowed down. Volume has dropped back to around. Let me show you what's happened there. If we look at the volume here, you'll see a couple spikes here, but if you go all the way back into February, and we were at 3.5 billion shares a day back in February. You can see this hump here, and you can see I've got the market grid on here as well, and you'll see that we've been contracting in volume, in ranges. Everything is contracting. Now, typically when that happens, there's a burst up and there's some volatility to show up. Now, whether we get that type of volatility show up here or not, we'll see. And I'm going to put something else up on another screen here, just see if I can get something going, all right? Just bear with me 1 second.
And I think that's one of the reasons why you're seeing
Yeah, I put over in the corner there. We can watch the Fed. I've got CNBC on over here just so we can see it, and I can bring up the sound when we get the announcement, so that we'll see how everything comes out, see what they're talking about right now and all that kind of stuff. But the reaction so far in the markets have been there's no surprises yet, right? So you're seeing some volatility start to kick up, and this is a trade that is always there. The initial reaction when you see the Fed or a big news story come out, you can usually fade the reaction. So we spiked up, and now we're fading. And I didn't hear the statement. I wanted to bring that up. I'm not sure. I'm kind of watching to see when these folks are going to start talking about if they may have already read the statement and missed it. So that I think I might be. I don't think I can go back on this one. But anyway, so we're seeing a little reaction. Most of the reaction will be half past the hour when Powell comes on, and we'll see all that. So back to the dialogue, what I'm talking about here on the markets. Volatility's collapsing. You've got volume collapsing. We put the VIX up. You see VIX is just hanging around its 200-day moving average. We actually had a little buy signal on the VIX, and it already faded out. So we used to have a term on the floor, there's no VIG. There's no volatility here at all. And this may be a precursor, whether it's complacency or whatever, but I've been talking about for probably 10 days now that we're going to enter into this sideways trading range, and it's going to get really, really boring. I said maybe I should start putting a Summertime Blues song on because that's basically what it looks like we're trying to enter into, and we'll just have to see what happens. As far as the any major change in the markets come, I think I think we're 4 to 6 weeks out. I think we're going to see a wide choppy range. I'm going to bring up the Nasdaq here. And I want to go to a weekly chart. And you can see we've got this drifting lower pattern on the Nasdaq. This is just going to continue. You know, it's not it is what it is. There's no way we're going to see any type of big breakout rally here. PPMs are fading. At least PPM 1 is starting to fade here. See where my cursor is? That's telling us that there's nothing coming here, and we're just going to stay locked in this range. So what that means is there's a lot of trading opportunities around this type of stuff. So we'll have to just keep a close eye. The market grid's going to be key in trading for the next, I think, for the next foreseen future as far as that goes. I'm just bringing something up on the other screen just so you can see. Man, this new Windows update has jacked up my entire desktop. Okay. Yeah, I'm going to bring the grid over here. One of the things that you're going to need to pay attention to as we go forward is really looking at the weekly and how these numbers match up. You can see that the weekly resistance 2 here is 32.59. We have not gotten down below that 3,200. It continues to hold that number. I've talked about that several times over the last, say, 6 or 7 days, is that 3,200 looks like it's going to hold. But we're starting to see, and I'm going to go back to the charts here in a minute, but you're going to start to see this thing fade unless we can break over this 3280 number. That's going to continue to be your top end of the range. So 3185 to 3280 is going to be the magic numbers as far as the market's going forward here. So looking at the Nasdaq market grid here on a weekly basis, you'll see the low was 10,401. S1 was 10,302, so we didn't quite reach that. 10,758 is R2 is the high so far this week. 10,791 is R2, and I talked about this on Monday night's video that I expect to see an S1 R2 week this week, and that's going to be your trading range. Now we may be able to, after the Fed today, maybe they can get something going there, but we'll see when Paul starts to talk if we get any movement at all. And what I would like to do, if you folks are okay with that, when he comes on in about 20 minutes, I'd like to at least hear his opening statement, and then I can react to that as well. Okay, so let's go to one more level on the NASDAQ, and let's start to look at the monthly market grid. And similar numbers come up. 10,771, that matches pretty good. R3, 11,101. We saw a high this month of 11,058. So we basically hit an R3 on a monthly. On the downside, we never came close to an S1. The low was 10,076. S1 was 98.52. But this will update when we come in on Monday. We'll see some new numbers here for the month of August. And I expect that this is going to continue to be in this range that we have been stuck in. The market grid isn't going to change much. In fact, the last 3 months, it looks like it may start to contract as well, where we see the squeeze on the grid. And let me just show you what I'm talking about there. Right now, this grid is flattening out, and typically what that means is you're going to get a zigzag formation to set up here. So it would make sense, I would think, that with everything that's going on, especially with the uncertainty in the economy, that we've come to this point. Now it's, Jerry Maguire time, show me the money. And it's going to be very interesting because there are major segments of this economy that are completely broken, and who knows what it's going to take to fix them. Hospitality for one. I mean, you just think about there's both skilled and really almost non-skilled workers there. If you look at all of the displaced people in the lower end of the spectrum of the economy and the employment spectrum, it's sad. It's really sad. Looking at just the hospitality and all the maids and the folks that do a lot of hard work around these facilities, and they got nothing. And where are they going to go? What are they going to do? I mean, it's incredibly sad moment in society that even people that are willing to do what it takes to make a living can't even do that right now. And yeah, so this is a tough time for sure. And ultimately, the economy will come into play. I talked about this maybe 3 or 4 months ago, and I still believe that is the case. And there will be a moment of reckoning on what the fundamentals really are and what they really mean from that standpoint. So a couple things. I'm pretty sure I'm kind of multitasking here. I got Charles in the room, and Charles, if you're hearing me, just let me know.
I hear you.
Okay, good. And everybody can hear you right now, so just mute yourself out, and I'm going to go through a few more things, and then we'll come up and I'll get you set up as a host so you can show your screen, and we'll go from there. So, yeah, so the whole economic thing is real, and the Fed can only do so much. But they're going to continue to posture, and this is one of the things that I talked about before, was that the Fed's going to tell you anything and everything that they think you need to hear. And looks like we got the senators talking. Who cares? Trying to grill Bezos and all the big tech companies. But yeah, this economy is just so destroyed, and there's the lower probably 20-30% of this economy is really damaged terribly, and I believe that we're probably going to have to support these folks until the economy gets back, maybe hospitality gets back, and all these things start to happen. I think you're going to see universal income. I think you already see it. And right now the folks in the House and Congress trying to pass this thing is, I mean, these people are a joke, right? I mean, they can't even do what's right. They're going to fight over nickels and all kinds of stuff. So it's really, really kind of depressing to watch our government work right now, for sure. So anyway, on the NASDAQ monthly then, I would expect that we could see the top end of this range be hit, which is at 11,000. I think that's going to be a ceiling for right now. And we're going to have probably 1,000, maybe as much as a 1,400 point range. And I believe the month of August is going to be more of the consolidation that I've been talking about. The last thing I'm going to cover here is I'm going to bring up some of these spreads, and more specifically, we're I'm going to back up here. Just I want to show you this on a daily. We're continuing to see these spreads work. This is the yeah, this is the small cap. So we're setting up this bottom, and I was a big spread trader because I used to work with the banks for a long time, and these are classic bottoming formations. So I've been talking about leadership change, some of those other things that are likely to happen, and this just takes a while to form. And we're seeing some leadership changes, and it's back and forth as far as that goes. When we look at the weekly, you'll see the same pattern. Now we've tried to set these up about 3 times over the last year or so, and I think, as I've said before, if the economy is going to come back online to the next level, and that we can solve some of these dislocations of workers and capital and everything else without even bringing in the commercial real estate world, which is upside down big time. Without all that stuff, if we're going to get this economy back online, what to we're going to have to see the small caps and the mid cap sectors of the stock market come back into play in a material way. Okay, so all right, this is yeah. So we still got just talking heads on here, Google people, all that kind of stuff. I'm going to see if I can get Charles on and get him set up so he can share his screen so we can talk options for a few minutes here. Bear with me 1 second.
Yeah,
Yeah, we're live on the channel, but I just want to get you set up, so I'm going to make you a host, and then we'll do an introduction.
okay.
Okay, you should be able to. When I see your screen come up, I'll know that you got it working. And just give me yeah. Okay, I'm seeing it coming up. Perfect. All right, so I'll be back to you in just a minute. Okay.
Sure.
Thanks. Okay. All right, everyone. We'll get back in and start to just set up, and I'll bring him up on the other screen here in just a minute. But you know, like I said, the economic viewpoint of the world is going to be very important. Ultimately, you can't avoid the inevitable, which is reality, which is the economy. Yeah, so we still got to talk again, all that kind of stuff. I'm going to see if I can get. Hey, Charles, you might want to turn your sound off on that other side so we don't get that feed.
Okay.
Okay, everyone. I cannot see the feed right now but let us know if you're hearing us. I'm trying to get to the chat for some reason. It has disappeared on me. Oh, I know where it is. Here it is. I got it. Yeah, let us know that Charles. Why don't you go ahead and let's start to talk a little bit. Yesterday on the WaveTech show, we introduced Charles. He's been around the markets as long as this old dude, and we've known each other for a long time, and we're going to start talking about how to use WaveTech and how to set up some option strategies, and we're going to go through a few things that we talked about on that. And Charles, why don't you go ahead and take over for a few here, and I'll just interact with you.
Sure. Okay, I imagine everybody can see my screen. Maybe not yet. So Bob's work is that I've been provided with at the moment is more long-term. He's in trades for hundreds of days. 222 days is the suggested trade of one of them that we're going to talk about today. Another one's 158, 178, and 192. Well, most of the options trading that you see around the internet deal with weeklies, something that's expiring tomorrow or the next day or monthlies. And so you won't be hearing things or strategies that apply to the work that Bob's got going. But I've been digging into it and I have a bunch of ideas, and I'm going to show you the thought process that goes into it and why. And so he's given me 4 candidates. One that got a current buy as of on he sent me this list on the 27th. So that's 2 days ago, or 3 days ago now, or no, 2 days. So it said 1 day. It's the first day. The second one's the first day. The third is the first day, and the fourth is the 6th day of the call. So I'm going to go over it. So now you can see my screen, and I'm going to pull into it the 4 candidates that Bob brought in, and I'll just make this bigger. And I've kind of changed some of the spacing on it. But this first one's Citibank, then JP Morgan, then Coca-Cola, then Pfizer. And this first one, the current buy is on 7/27, first of 222 days, first of 158, first of 178, 6th of 192. All right, and then he said he has a floor. The average loss is going to be 46, down to 46 from Pfizer's current price as of then is 51.60. We're going to pull it, of Citigroup 51.60. We can see that behind here it's 51.27. So we haven't missed anything because the price is a little bit lower. So that one's still a candidate that we'll talk about. It says that the projected profit is where the stock goes to 95 and then the mean of 75. So being conservative, but we'll just play for 75. That's plenty. I mean, options can go fully in the money if they're several strikes lower. So there's no need to, stick your neck out and go for the lower probability of meeting this one standard deviation and take some of the, have our full profit long before that maximum projected profit. And at that point, you could decide you want to roll it or stay bullish if the chart pattern and the PPMs and those kinds of things still warrant being in the trade. So that's the basis that we're going to go off. So let's take a look at this first one. And what I've done is, let's just go to the charts for a minute. What I've done is I've drawn a box here with the time that it takes. This is the 200, let's see what it is. Let me just pull that up again so we have it in front of us. So this 222 days extends to June 15th of 2021. So that's this date out here. That's where we are out here approximately. I got a weekly chart up here, so I have the 14th as the next day. And the low is this $46, and this high is this $75 a mean. So that's where my squares are. Now let's just cycle through the other candidates for a moment. JPM, I've done the same thing, JPM. And there's JPM's box, and then there was Coca-Cola. And there's Coke's box, and then lastly is the Pfizer box. So that's what we're going to try and set up our strategy, because that's our target. Bob, do you think that's a reasonable thing to do with regard to picking my floor and my ceilings?
I think this is perfect.
Would you put in a different floor? Would you put in a different ceiling? Would you have a different time frame?
No, I think this is perfect as far as this goes. This whole setup at least gives some visual orientation on what the expectations are. So I think that's good.
All right, so let's go to the options, and let's first. Bob said that he created a special grouping from barcharts.com, as he talked about yesterday, of the top 100 most liquid options. That's charts. We want to go to the Analyze tab, and you could tell that that's true by looking at the open interest and the volume, which are in this area here. The calls are on the left and the puts are on the right. And this bluish area background is the in the money calls, and over here, the in the money puts. And the black background are the out of the money, at or out the money, and at or out of the money puts. So right now, it's 51.27. So right between 51 and 51 and a half, these strikes are only 50 cents apart, is where these lines are. So we're going to talk about a couple of different ways that you could trade this, but it also is 222 days. So if you look at the options, we can pick one with 234 days or one with 171. The closer you get, the more liquid they are, because if you look at the volume, there happens to be a giant trade that is with 52 days ago. But generally speaking, there's less volume and open interest the farther you go. Here's the open interest, but there's sizable open interest out here. That's nice. And look at the bid and asks. So if you look at the closer months, and this is why there's a lot of action in the front month, and that's why most people in the options sphere are trading the front months, is because of the narrow bids and asks. 6 cents here, 6 cents here, 5 cents here, 4 cents there. But if you go out, you're going to get wider markets, 15 cents, 15 cents, 20 cents, 20 cents. The out of the monies are narrower at 9 cents. So, but I teach a strategy of looking at the middle, which is called the mark. So the middle, let's see if I can just move this over here. I can't like that. Let's see if I can move it like this. Customize. And let's just move the mark down by going move down. And move it down again. Okay, that's as close as we want to get. Oh, one more. Nope, that's all to go. So the mark now is closer here. And that's what you really want to look at. You really want to ignore the bid and ask, because the market maker makes his money on being competitive around fair value, which is close to the mark. And his models, and every market maker is different and has a different sense of where pricing belongs. But the collective bids and ask are the best bid is in this column over here under bid, and the best ask. But where people are willing to trade it is another story, depending on whether it fits their position or how aggressive they need to be based on their positions talking to them. Their positions talk to them because market maker comes to work and he's got no agenda. He just wants to buy in the bid and sell on the ask, his bids and his asks or hers. And he really has nothing to do until somebody sells him something or somebody buys something from him. And every market maker's trades the underlying immediately afterwards. So if somebody comes in and I'm in the pit or I'm in the electronic pit and they buy 100 of these calls and I say they're bidding 194, which is a little bit over, or 195, I'm going to say sold and I'm going to hit it. And then I'm going to look at my delta, and the delta is 51. So if I sold a 10 lot, I got to buy 500 shares immediately. I don't even think about it, because I'm not bearish when that guy's bullish. I'm a pricing animal. And so when you're a customer, you have to know what motivates the pricing animal to make the trade with you. So and this is going to save you money, because there's a lot of money in slippage. If you pay the ask all the time and sell the bid all the time, when there's no need to panic to get in or panic to get out, then you're going to try and work your orders. And what's nice about spreads is, like, if I click into this thing and I want to buy it as a customer, it defaults. Let's go to the trade page. And let's see. Let's see. Okay. Right now it's 187. If I double click that, it's going to show that I'm going to pay the ask down here in the lower right-hand corner. Notice that the ask price is right there, and it's going to float. And this lock is unlocked, and it's just going to keep fluctuating as that price changes. Now, it hasn't changed from 187 at the moment, but the nice thing is that when you click into a spread, so I right click, I say buy, and then I get a menu of all these things, and I say vertical, it's going to default to the average of the two. So this happens to be the 51.5, 52 call spread. And notice that the mark price, which is over here on the left, 185 minus 161.5, they round it up to a whole number, it's 24 cents. Okay. And it would probably, if I was selling that, price sell vertical, it does the same thing. So it's going to go to the average. So that's important, because if we're going to play with Bob's numbers here and play something longer dated with, say, 233 days, we're not going to want to pay the ask on a vertical 295 and then sell the other one at 560. We're going to leg it we're going to enter it as a spread. And if I go buy vertical, the price comes up to 115. Well, the ask of the spread is 590. If I'm the market maker, I'm going to ask 695 for this and pay you 560 for that. The difference is 135. And if I bid for it, I'm going to only be 95 cents bid. It's miles wide. 95, which is 670 minus 575 ask. If I'm going to be stubborn, no, you got to give me my price. No, I'll never make a trade in my life. But if I think in terms of the averages, 682.5 minus 567.5 is this difference of 115. So that might not get the trade done, but I can modify it and say, I'll give you a nickel. And the market maker will probably grab it, jump on it, kill their mother to get that trade, because that's the nature of the business. So that's a little bit about the basics of execution and options, and something we have to be wary of if we're going to be playing with time durations out here in the long dated options. Now, does that mean that we shouldn't trade them? Well, if you talk to most active options traders, like I said, they're going to stay within the few months. But Bob's work in his epitaph and the opening of every video is how to manage your portfolio and protect your wealth, right? So there's a couple of things in there. Think about it. Protect your wealth. Protect means hedge, right? And it can do, or just to be in the proper, correct investments by the diversification, like the portfolios that Bob's work and his software helps you build. So what about protecting it? Because there's all sorts of uncertainty. He says there's a 60% probability that 10-week moving average is going to hold, or when he makes phrases like that, there's also 40% chance that it won't. So are you just going to blindly go with 60%? Well, if you do, and we do live in this world where the plunge protection unit is fully entrenched, and they're going to bail out these markets and keep supporting them with their trillions of dollars, either publicly announced or not announced, and just do it anyway, and have unlimited QE. Bob's 60% of probability is going to keep you working out fine. All of us worry about, though, the day of reckoning. We see gold going up. We see the abandonment of our currency. The dollar's been weak, and we hear different stories about what the BRICS are going to do. BRICS being Brazil, Russia, India, China, and going against the hegemony of the United States, military power, whatever. We're backed by bigger guns and bullets than they are. So at the end of the day, the game is going to probably continue to work out well for investors in equities. So, but do you want to just blindly go along with that? It's worked. It's worked. Every market crash or decline has been followed by the dip. Buy the dip, stupid. Just buy the dip. You've probably seen those cartoons. They're hilarious on the internet. Buy the dip. Don't you understand? Buy the dip. So Bob's helpful in giving you where to buy the dip and the likelihood that those buying opportunities will meet those numbers with his 3 S's and his 3 R's, right? And his other indicators that are measuring these moving average and the directions of those. So, but on the other hand, we still want to, not blindly just do that. So we're going to do things in a limited risk fashion. And you could call buying Amazon at 3,000 limited risk. You can only lose 3,000, but if you lost 1,000, that's like unlimited risk for somebody who's shorting Amazon at 3,000 and it going to 4,000. So when in the options world, we think of it as not being limited risk when you own the underlying. We like to think of limited risk as playing for ranges and having floors in place, and oftentimes to reduce the cost of our trades, we have ceilings. So you could look at this, for example, in Citi and say, okay, well, if I buy a vertical, let's just go to the Analyze tab here, and let's change this from singles to actually looking at deep, wide, 1 month, 4 strike verticals. So now what you see in the strike column is $2 verticals. So the most that any of these bull spreads in the case of buying calls, or bear spreads in the case of buying put verticals, are limited risk, limited gain. And you could also sell a call spread, hoping that it goes out worthless, but it's still limited risk, because if I sell it for 65 cents here, this 52.54 call spread, the most it could go to is $2. So I'm risking 135 to make the 65 that I sold it for, in hoping that it goes out worthless. So verticals are sort of a microcosm of of playing a much bigger thing. So if I'm bullish,
Hey, Charles,
sure.
just want to, if we could just like set up a trade, because the shit's hitting the market right now. And I'm like sitting there and I'm like, if we could just set up like a trade, like here's like a classic trade, like, do this vertical, and then, because this market's going shit crazy and Paul's talking, so I'm getting anxiety here. So
Well, maybe you should take over for a while. And I mean, you want me to just set up a short-term
yeah,
bearish play?
set up a trade. Here's where it goes. Here's where the marks are, and this is where your risk lies, and within that window. So I'm just gonna go back, because I didn't get to hear the statement and all that stuff. So I'm having anxiety here. But yeah, so if we could just like set up a quick trade, and then I'm going to take you off screen and go back to the market so we can talk about that. And
Sure.
and then just give me a little bit, because I'm not sure even what happened, because I didn't get to hear the statement, because if I put it on, it was going to go over you. So the way I got it set up. So anyway, so let's yeah, just mute out for a minute, then I'm just going to go on this. So obviously, everything Paul said was wonderful, right? We're going to go over here. We're going to see we're punching out new highs on the futures as we look here, and we're now up 1.22%. I'm going to go over to another screen here, and what we're seeing is the Nasdaq is now up 134, printing up toward that ranges that I was talking about a few minutes ago. And I know this all feels exciting, but guess what? We're still in the trading range. We're still not breaking out. And so I'll have to go back and listen to Paul's statement later, and I'll reflect in tonight's video what's going on. I feel kind of blindsided right now. But yeah, I fear when I brought Charles on, there was going to be a conflict. I didn't want to stop where he was rolling, because he's setting up a lot of theory. But I think if we can get a couple trade, actually one trade set up, just to show how you would look at the grid on that, and then how to set up a leaps and some of the stuff that we talked about yesterday, Charles. So, but anyway, yeah, from the standpoint of going to the daily chart on the Nasdaq, we're pressing up on the market grid right now on the Nasdaq. This is a Nasdaq futures, the nearest contract, and we're looking at right now we've got the 677 was R2, R3 is 749, so we printed right into basically R2 here, and we should see some resistance. PPMs are kind of turning up a little bit, but not anything of significance here from that standpoint. But we're also seeing something here which is a concern, and I brought this up when we started today, was that there's a potential, if we close over 32.45 today, we've had a high of 61. And remember last week's high, 3279.99. That's your pivot. And so as we trade up here, if we manage to close over the RXT number, which is 32.45 today, we close above that, that's going to be not a good thing. That's going to tell us that we're likely to fall back into range again. Could continue. Doesn't mean it's not 100%, but that's it. The other thing, I'm going to go over gold here in a minute because that's also popped, and gold and silver have popped. I was talking about staying in a range. I want to see where they are to bring in the context there. So I should have slid my monitor over so I could have watched some of this stuff while Charles was setting up and on the trades. But the bottom line is here is if you look at ppm1, this is the daily S&P, it's not responding to this change in prices. I know we're up 41 handles right now, we're at 59, but we're not getting any momentum increase. And this is exactly the danger. Now, meanwhile, that trade that I talked about that we put on back on 5-4, that thing is still live and it's not going anywhere. It would have to close under 31, I think it's 31.87 or something to get a trigger out. And of course, we're nowhere near that. The other thing that we've seen, just talking about the Fed and the reaction to the Fed, I'm sure I'm watching Paul on the other screen over here, and I'll put him over here on the screen for you. You'll see that he's basically got what do they call it, that shit-eating grin on his face that, like I'm sure he's got his iPhone sitting there with the live market quotes on his desk there. So he knows he's getting what he wants on this stuff. And of course, you're seeing they've got a gold price up there. It's at 1970 right now. We'll go through gold in a minute. But this is the thing that I think is important to understand is we're not seeing any real increase in momentum. Now, the underlying trend, ppm2, is at a 0.31. That has upticked a bit. And ppm3 is still basically neutral. And this is my concern in this pattern, is that we're seeing the increase, but we're not seeing any type of VIG or any type of excitement flow into markets from a momentum standpoint. Momentum's just, yeah, so what? It's really not telling us what we need to tell. And it's the same thing if we go over here to the NASDAQ. Looking at the daily NASDAQ, they are upticking, but we're still below first, second derivative, and everything that I talked about a little bit ago as far as the models, as far as the market grid, especially on a weekly basis, going over weekly on the S&P here, this is exactly where, this is NASDAQ. Let me go to S&P. You can see we had this massive contracted range. Well, we're printing up toward, here's 30, R2 on the weekly is 3259.25, the high 3161.59. So we're basically printing an R2 print right now. R3 is the magic number at that 3280 I've been talking about, and I have discussed this over the past couple of weeks. These numbers are still in play. Sometimes I get focused on the daily commentary that I do every night, get focused on the very short term, but those numbers are still out there. That 3280 is still the magic pivot number. And if you look at the weekly, all of these indicators that you're seeing on the screen actually update real time. So they're gonna change. You can see on the pop-up window that's there, you see not just the volume, but you'll see the fast average, which is the 10-week moving average. Those values are changing as the market's trading. So everything is updating real time as far as the actual value of the moving averages, of the indicators. All of these things are definitely updating. So we're seeing a reflection of the price movement on the screen right now. One of the other things I want to point out, if you notice, IJR is up 2.37. So what have I been talking about? The leadership change. Let me go back over, and we're gonna put this on. This is the spread, and we're gonna go to a 60-minute spread, and you're gonna see this upward slope. This is the last 5 days, and I continue to discuss about what these spreads are doing, and it's somewhat of a hard concept when you're a spread trader to start to watch these things unfold, because it's like watching grass grow. They go very slowly and they'll start to make movements. But over the last 5 days, this thing has done really well. And then if we go out to a daily graph, then you'll see there's been, there was a new low, but this overall formation here is what a bottoming pattern looks like. And when you see that type of pattern, we're likely to come back into a range on this spread chart that is really doesn't look like much if you're not a spread trader, but we easily draw a line up here. We could easily come back into this range here, and so you get this little wedge setting up, and you've got, you know, a broad band down here. So you've got your consolidation band at the bottom where it's setting up, and then you're seeing this configuration. So we've got a ways to go before this breaks out. This is a very early pattern that I've been talking about, and this is when you're looking for shifts in leadership. These are some of the things you do. And the other thing that we have, and I've talked about this in great length, is that the rotation in our database is actually also telling the same story. You look at the symbols that are coming out, these are all mid-cap and small-cap symbols that we've seen rotate in the last 10 days. And the database continues to be 86% long. You know, I talked about in last night's video that I thought we would see some sort of back tracement here as far as the markets go. And, you know, we came in, like I said, last night, London Open, we did a premiere opening for our video last night, which all it does is it shows up as live, but it's a pre-recorded live. But I usually show up and chat with everybody, that most of the European folks and some of the late vampires like myself that are up at 1 and 2 in the morning. So I'll chat with everybody. It just makes for a nice chat line, and I can interact with you folks. But the bottom line is this: what we saw last night was a bid come in right at the London Open. It continued to go, and then once the early morning New Yorkers came in at between 2 and 4 a.m., when those guys came in, they kept bidding the market. Of course, they're getting evidently what they want from the Fed, as everybody seems to be fairly pumped up on what's going on with the Fed at the moment. I'm going to bounce back over to the chart. So it looks like we're starting to show some signs. We about 4 handles off the top. And the thing I want to talk about right now, just for a few minutes, is when we see this type of action in the S&P after the Fed announcement, a lot of times this thing will fade into the close, or it'll fade Thursday and Friday. And if you recall from the video I did last night, we've got a ton of significant earnings coming out after the close today. There's a bunch in the morning. If you look at what's coming out, they're big names, and they're banks, and they're material, pharmaceuticals, you name it. Everybody's coming out right now. This is a huge earnings week. And then tomorrow at the close, we got the likes of Amazon and Google and Apple and all the big juggernauts. So we're going to see some extreme volatility as we come into the range from, I guess, as we come into Friday's trading range. We're gonna continue to see volatility. Is it going to be one-sided? I don't know. I don't think so. Everything I'm seeing here is we're going to stay in the sideways range, and we're just printing up at the high again. So if you want to be the bag man and buy this thing up here for a breakout, and if it works, I call it the Jim Cramer trade: buy high, sell higher. And if you can do that, then that's amazing, because they don't work very often. And so you want to be careful about buying these type of markets up here. Now, meanwhile, if you have long trades on, you can continue to hold them, and that's the whole process of the of the WaveTech stuff. And Charles was talking about the trades I sent him. I sent him long-term trades. I should have sent him short-term because we have 35 to 50-day trades. They're probably better for him to try to set those trades up, and I'll make sure he gets better trade ideas next time. But so the short-term stuff, as I've been talking about, let's just bring that on the screen for just for a second here. Yeah, so if we bring this up on the screen and we look at the research, you see it's 65% on intermediate. We go to the daily and we're looking at 85.31. This thing just won't roll over. A bunch of these trades are long in the tooth, but we've also seen rotation even on the indexes. Basic materials, you see it's been on for 11 days, is up 6.5, but when you break it down, you know where the flow's coming. You go to gold and silver and you're looking at, there's 44 symbols in this thing. It's 86% long, and you see there's some monster trades in this list. So if you'd have been looking at metals and the last 30, 40 days and you were already bullish gold, this would have been where all your trades are. Like I'm going over to a Nico Eagle, and you can see it had a really nice trade. It got out, it's back in again. If we go to a 1-2 trade, we might see it'll get a better entry off of that low. There it goes. So you get a nice entry. 1-2 is a much better trader in this volatility. So we got a buy down here, we got out, and then we got back in, and now we're long again. Got 22%. And if we look at the actual model results, we can actually see these trades. So we can see these trades here that we're looking at. We made 43%, and now this trade's up 22% on this. So there's definitely some things that you're going to be able to find. But yeah, look at this market's starting to fade pretty good, and I'm sure Paul's probably stopped talking. That's probably, once his mouth stops moving, then the markets are probably gonna fade him, and that's most likely what's going on right now. We're just seeing that happen. Let's see if he's still on screen. Yeah, he's still on screen. But yeah, so whatever's going on, this is a fade trade up here, especially as we printed, as I mentioned, we're printing up at that R2, R3 level. You were above that the RXT on this trade. We're going to fade. You actually, if you're bullish and you think this market's going to go higher, you don't want it to close above 45 today, and we're still above that level. This is the futures. And if we look at where the cash is right now, you'll see the cash right now is at 54. So anything over 45 on the cash is going to be a negative, or at least suggest that we're going to get a couple days to the sideways movement. Yeah, I just wanted to cover that since we had a lot going on there. Let me just see what's going on the timeline here. Yeah, just see what folks are saying here. Okay. Yeah, so I'm just looking at a couple comments here and see if there's anything going on. Yeah, Adam Ross says he struggled to find out the cost of using WaveTech. It's $97 a month, but if you go in there and try to sign up today, it's going to charge you for 2 days and prorate it. So it's going to be like $12, and then you'll get charged on the first again. It's an auto pay setup. So that's about it. So not a lot going on. You guys are having too much fun on this line here. So on the chat. Yeah, so it is a single usage, personal usage. Yeah. Okay, so all right. Hey Charles, if you've got a trade that we can set up, I think I can bring you back on screen if I've got so much stuff going on. Yeah, and we can maybe do a quick trade setup, and then I've got a bunch of stuff. I need to cover a bunch of stocks and things for these guys. I've got stuff all over the board here. I think, are you still a host? Maybe do a quick trade setup, and then I've got a bunch of stuff. I need to cover a bunch of stocks and things for these guys. I've got stuff all over the board here.
Well, I mean, you don't want to do a longer
Are
term.
you still a host? Yeah, maybe what we need to do is just set up a short term.
You don't want to do a longer term.
Yeah. Yeah. I think
So why don't we wait for a time when the markets aren't so turbulent?
okay.
And then you send me a new list with 30 to 50 day trades, and we'll pick it up from there.
Okay. Sounds great, man.
Okay, take care.
All right. Thank you. Okay. So let's open this thing up for individual stocks, and let's see what we can get going. And cover a bunch of stuff now. Meanwhile, while we're still keeping an eyeball on our buddy. Yeah, he's still going on and on, I guess. Okay. So what do we got, folks? Got some individual stocks for me? Let's start going through it. I'm just going to start off. I know everybody's going to ask for Tesla, so I'm just going to start off with Tesla from that standpoint. And the Tesla's up 2%. I know this may sound redundant, whatever, but what we're seeing here, a bunch of these markets have entered this, what I call a volatility band, where you see the market grid just expand out. It's sort of what happens in using standard deviation lines, like a Bollinger Band type indicator. You get these volatility where it gets I call it the bubble on Bollinger Bands. I never could figure out how to use them, but that's my fault, not John's. But I never really worked with them. But these are volatility. These are based on the actual price volatility, and it's taking into account what the bar movements are on a week-to-week, month-to-month, day-to-day, even a 1 minute basis. So what it does then is it calculates an average range that it's likely to do, and then it figures out, based on a Fibonacci calculation, where the key pivot points are within that range. And they're not just a high-low calculation. I've had people trying to figure out what I'm doing. They're not going to figure it out because it's not necessarily straightforward. But the numbers that are coming out here, like I said, are going to continue to be the dominant range. So Tesla is got an outside bar. It actually had a reversal bar. We'd have to close lower on the week. If we did close lower on Tesla, then we'd probably move toward the bottom end of the range. But we have some, this is a weekly, there are some pretty substantial, there's some substantial support along this 21 week or 21 day moving average is actually the primary support line. And the way I use moving averages and the way that I look at moving averages are a bit different than most folks. I look at a potential demand line. Otherwise, the primary demand line, I use the 10, 21, and 40 period moving averages on all my charts. I'm an old dog. I've been doing the same thing since 1984, and it's led me all the way to here. How many years later? A lot. And the what happens with the moving averages, and the reason why I use simple averages is that it helps me just to identify patterns. I don't want them to adjust. I don't want exponential numbers. All I want is the ability to recognize where these lows are. And I spent a lot of time back in the 80s figuring out probabilities around moving averages. And the whole point of moving averages is trying to figure out where the support line is. And so the PPMs that you see on the page are actually showing you the rate of change or the percent change of moving averages. The other two lines on there, first, second derivatives, which are telling us when probabilities are rising for moving averages to be penetrated. And if you look up at where I put my cursor here, back on 715 on Tesla, this was where we got a cross, and this is after that big spike price, that crazy spike that we had that day. This is a daily chart. And since then, you see we went sideways, and now we've traded, we keep trading below the 10-day moving average. Now we're up a bit, but we're still below 1525 is that 10-day moving average. So even though we're bouncing, we're up 1.73, we're still below that number, which is a significant point on the chart. So as far as this goes, you watch the 21 line. If we close below it, then we're heading for the 40. We're heading for probably somewhere between 1275 and 1215 on Tesla. Yeah, so good. I'm getting some good action here on the screen. Let's go from that. Let's do gold. We'll do gold, silver. We're going to hit on Bitcoin. This gold trade that we had come in on 716 at 1819 is still long. If I actually flip this, so this is a good model for this. You see the expansion, ppm 1 0.75, ppm 2 0.42, and 0.35 on the bottom over here on the left. That is very robust, very, very strong uptrends, which suggests that there is going to be major support. But as I keep talking about, these market grid numbers are a substantial range, or indicating that there's going to be a trading range. I can't hardly find anything that hasn't moved into this volatility range at the moment. So somebody's saying silver is crashing. Let's take a look at this. Crash is a relative word, I'm sure. We'll put up a 5-minute graph. Yeah, so yeah, just big reversal. And this is how you're going to trade. We'll go to the daily grid here real quick, since I'm just kind of responding to some of the comments here. So if you look at the 5-minute graph, we spiked up, made a new high. I'm telling you, there's plenty for sale on silver right now. It's going to trade like this, but you'll see this market grid, even on a 5-minute chart, got that volatility spike. And now we're looking at the 21 period moving average at 24.52. The low's been 57 so far. On the upside, we're looking at 24.68 is R1. And these are 5-minute numbers. But when we go to the daily here, you're this spike that we saw yesterday, that crazy run up on silver, that is basically a capitulation, a volatility spike, and we're likely to see this also just stay in this range. And when it gets up at these higher ends, you get into the R2, R3s of this pattern, you're going to see sellers and you're going to move within this range. So don't expect these things just to run away here. They're going to feel good. They're going to feel exciting, but it's just going to be whatever. Okay. Yeah, I can come back to this if there's more questions. We're going to BA. Every time I look at this stock, I fall asleep. There is a 3.2 trade that's been long forever since 5.8. Bought it down at 131. It still holds this thing. It's one of these. We call this the creepy crawler. It just keeps crawling along. It stays above numbers and the patterns that it needs to remain above to be able to actually maintain the trend, and that's about all it can do. I talked about this last week. It's still the same analysis. We're looking at maybe a move up toward the 200-day moving average. You know, between the max and all the airplanes parked at in airport parking lots around the country, there's just thousands and thousands of airplanes not up in the air. And so, yeah, you can see here BA weekly, we're seeing a crossover of the first derivative on PPM1. It's still at a very positive number, and there's quite a bit of support, but we're trading below it right now at 177. Next level 156. On the grid, we're looking at 174. R1 was 177. S1 170. S2 160. Yeah, it looks like an S3 hit on this. We're 162.25 with a 161.75. So it's definitely trying to trend lower, and I think there's going to be more consolidation from that stuff goes on. Okay, so let's do Google, Alphabet actually. So all of these, and we'll take a quick, I'm going to buzz through the fangs here, but they all look the same, and they're virtually the same pattern as Tesla, and all the hot stocks that have been out there, they all continue to look the same as they have for a while. They're just looking at that square off market grid. We've got a range. There's no upward slope. If you notice over in this area here, when we were trending right here, you notice that the grid was, for the most part, in a trending upslope. We've been in the same thing over here on a much larger scale as far as that goes. But now we're starting to see it. We're starting to see it maybe downtrend a little bit here, and once again, there's nowhere for these things to go. The Nasdaq, whether it's Google, let's just go. We got Netflix, same pattern, same stuff. These stocks are done from the standpoint. Don't troll me. I'm saying they're done. I'm saying this pattern is completed. We're consolidation. There's going to be a consolidation for a number of weeks before this thing actually is able to get out of its way. And like I said, you guys don't want to hear this, but I'm telling you right now that the probabilities are that we're going to see a 4, 6, maybe 8 weeks of this crud that we're looking at right now, where the markets are just going to continue to grind in this sideways range. It is going to be interesting when see how the S&P finishes today and all of that. So let's do some more stocks here. But I could go through all of these, like all of the fangs. I've just put. Hang on. We'll put Facebook. I'm telling you, they all look the same. I've looked at them. I can bring them up, but just know that these things are locked in a range and they're not going anywhere. If you look at on Facebook, look at the PPM1. That thing is just plummeting. It's actually went negative. So we're talking about Facebook rolling over completely and moving toward the lower end of the grid, which is down at 212. And we'll see how this thing finishes and where the new updates are. But there's downside. This thing's not going anywhere as far as that goes. Guess we got to do Apple before I move on. Apple, same pattern, same everything. So it's going to be very difficult for this market to break out and go to, speaking S&P right now, or all of the indexes. Very difficult for them to make this crazy upward run with everything that's going on at the moment from the standpoint of the configuration of the technical configuration here is just not going to allow it to happen. But what it does, folks, is set up an absolute amazing opportunity for trading in these ranges. There's going to be a ton of really good trades. So the fact that markets don't need to be making a new high to have a great opportunity. So let's take a look, and I'm just going through some symbols here. OSTK, Overstock. Yeah, this nice trade. We got a buy at 744 on Overstock. This is on a weekly. This nice trade down there in Overstock for sure. And but look at the pattern. We got an expanded pattern. I'm going to take something off so this will look a little better. Yeah, so you can see the same pattern. I mean, this thing, I've talked about this over the past several months, folks, that what we're seeing here is actually many of these stocks are in the exact same configuration. So it almost doesn't matter what you're looking at in some phases. When I do these live streams and we get into heavy going through all the stocks and everything, it just becomes so obvious that everything is in the same place. There's very little rotation coming on the intermediate basis right now. A lot of these big stocks and all the popular stocks have already run their course, and now they're just going to consolidate. Like I said, that tells you that you got a range you can trade in. You can buy the dips, you can sell those rallies, you can sell the rips, and everything. You've got some good trading opportunities, and probably doing some outright option calls and puts. You can play these ranges pretty good. Maybe even do some verticals on this thing, both on calls and on the puts. So you can do all of this stuff. So we're not having any sound issues. I'm seeing some comments here. Are we hearing me okay? Yeah, so anyway, let's try Jazz. Pharmaceutical, weekly, got a buy, not much there. We are seeing PPM1 turning up here a little bit. A lot of resistance, 124 overhead. So we could see move, but you can see the grid flattening out, probably going into a range on this. More consolidation before this thing goes anywhere. We'll take a quick look at the daily. Okay, good, thanks. Yeah, I see somebody making a comment about options, man. Be really careful buying deep out of money stuff. I used to call it the lotto play. That's the only time you do those. Yeah, so Richard, you're talking about, I would be very careful with trades coming out of WaveTech at the moment, especially if they're trading, and I've said this before, don't buy symbols that are breaking out into all-time new highs. I saw on the weekly, some of the weekly trades that came out last week, there were definitely some by the top kind of trades coming out. And the other thing that's happening, which I've been looking at very closely from the standpoint of what's going on with the models, is this volatility spike we had, which goes back to the February, March, April, and then this big move back up. There's some symbols, especially 3-2 is coming in a little bit late on some of these trades. The 1-2 trades seem to be okay, but I would just keep an eye on those trades as far as using the WaveTech tool. That's for sure. I would definitely do that. Yeah, so if you folks haven't seen the WaveTech tool, this is how to get there. I'll just put this up on the screen real quick. It said you literally can get, there is no trial period, but it's 97 bucks a month, and you can set it up pretty easily. You're gonna pay for 3 days, and you're gonna get billed again, but it's worth a month's shot. And anybody that's on here that's using it has already tagged. One guy said he's paid for the next 10 years of fees, so that's good. It's a very powerful platform. There's a lot of videos out there that we do, both on the Portfolio Expert website. This is the best place to sign up. That's on this URL that's here, and that's what gets you going. And there's training on our support site, and then we do weekly training every Tuesday. And yesterday we ended up doing like 2.5 hours. So we'll hang out and just help you to learn how to use the product. But back to the trades here. Yeah, so somebody just commented, I'm so disappointed I didn't get to listen to some of Paul's comments. I'll listen to them later. But yeah, they haven't hit their limits. I made this comment on last night's video. These guys are absolutely going to do anything and everything. They don't care what it is. They're going to do it if it's going to support the markets right now. And support the markets, everything from municipal bonds. And, my expectation was if they would have gotten the stimulus bill through before this meeting was over, I would have bet, what do they say, dollars to donuts, that you would have seen the Fed come up with some type of announcement with expanding some program, and they still may. I don't know if these idiots in Congress can get anything done worth a shit for us, but I'll leave it at that. But the bottom line is that we're going to see more from the Fed. Everybody knows that, and they're going to continue to support this thing, and they're going to keep that out there. As far as and the reason for me saying there's minimal declines, like even in the moments where I start to feel a little negative, there's a floor on the market right now. Right now, that floor, in my opinion, is 3130. It's about 120 points higher. If you got down there, you could buy this thing with both hands blindfolded. And that's exactly what's going to go on. All right, Timothy, LPX, I think, is the request. Louisiana Pacific. Yeah, boy. This is a daily. We got to buy back on 505. And I've talked about this before. Some of the easiest money that I've ever seen made in my 40 years has been in this last 6 months. This has just been an amazing period of time. A bunch of these trades are getting long in the tooth. They will rotate out at some stage. I keep talking about the database rolling over. It doesn't roll over. It will roll over. There is a point in time. It's coming. And so that, just know that. But yeah, so this from a standpoint here, I'm going to put some Fibonacci projection on here. I've got the WaveTech projection tool. I will put that on there, just see what's out there. Nothing on this, but let's go weekly on this. Yeah, nothing weekly. We're kind of capping out the high so far, 32.30. 32.44 is R3, so we're tapping out on a weekly range, but everything, this thing is very, very robust. And you know, we saw housing numbers come out. Everything on the housing front, on the residential housing that's coming out, is significant. I don't know if you folks notice it, but I'm not seeing a lot of news or reports around the commercial market. And I know that we obviously know that the retail sector is just completely blown up, right? We know that. But it goes beyond that. I mean, I saw an article this morning, I don't know if you folks saw this, but it was talking about this massive eviction thing that is pending, because there's been a moratorium on evictions. So many people haven't been able to pay their rent. You know, what happens? I saw something like 40% number. Who knows what? No one knows what's real. It makes good clickbait, right? But if it is real, and there's 40% of the people get thrown on the street, figure that one out. INSG will do that. Yeah, this thing's breaking out of its weekly range. It's interesting. These kind of stocks like this, I guess this is a 5G play, right? And you got objectives right now. High target $20, 24, 27, 34. You see them on the pop-up screen. And that's a pretty substantial number from the standpoint of everything's going on. So anyway, folks, listen, if you're on here, do me a favor and smash the like button. Let the YouTube folks know that you like what we're doing here. That would be awesome. But yeah, from this thing here is breaking out and could be substantial. Let's go to a monthly, because you got to go long term on some of this stuff. Yeah, long term. I want you to see this. That WaveTech bought it at $3.67 back in 2014 on a secular trade. So that's been on forever. If we go a little closer in, we look at weekly. It's been long here since the breakout here at 945, and then if we go daily, we'll see where we're coming in at. And this may not be the best model. Yeah, on the daily, it's been choppy here over the last several months, has been consolidating. But you see PPMs breaking out, everything's moving higher. And here's another one of those projections, 2027 off of a daily, and that same projection showed up on this other thing. Yeah, somebody's saying commercial real estate feels bad. It doesn't feel bad. It is bad in LA. And I'm trying to get some folks to come on and maybe have a conversation about some of this stuff. I want to start bringing in different types of folks that can help, that understand some of these markets better. Yikes. Intel, yeah, got whacked on that trade. It was actually long and got blown out on that gap trade the other day. Yeah, this is pretty ugly stock. Yeah, same thing. Yeah, everything got blown out on that gap trade there. But let's talk about value here. We're trading at that 200-week moving average, and PPMs are pretty seriously down. And the fact that they're down doesn't mean that actual price action will continue to go down. So we could see this thing actually start to, start the bottom right here. This could be at least a price point to watch. And the best way you're going to see that is if you have the ability to go and watch maybe a 60-minute graph or something like that after the big gap here. You'll see the gap going down, and now you're seeing something else, that's narrowing of the market grid. This is an hourly graph that we're looking at on Intel, and this thing wants to go back to $48, $50. It's at $50 around, and possibly moving up to around 52. So there's short-term trade, maybe somewhere here, but these are tough. One of my old buddies from trading floor days used to always say, don't hang around trouble. There's too many good stocks. So if you got a stock with trouble, find another one. Don't try to be the hero to catch the falling knife and all those cliches and all that. But it's true that is what's going on. And, these guys got lots of problems they're almost like the Boeing of the chip world, right? They made all these announcements about this new thing, this nanotechnology chip, and now they can't deliver it. Well, they actually could deliver it, but they won't make any money because they're not getting the yield on the chips out of the wafers that they're cutting. So all that's telling you is they've just got, and maybe it's a very fixable thing, and maybe it's a systemic issue. You'll know 6 months from now if they can't deliver. So I guess I'm going to go back to BA. Somebody's saying that it actually it's down 2 5/8. Let's just go to a short-term graph here. Let's go to a 60-minute graph here. Yeah, things probably going to try to bottom here. There's not enough work here. You need to work this through. I don't know that I'd be grabbing at this thing. And like I said, this is another dog with fleas, right? To use the Wall Street analogy. If you look at these things, you're going to see that these problem stocks are just not worth messing with. And I think probably right now, folks, it's probably one of the hardest moments in time to find good ideas. So if you have the WaveTech tool, we're throwing a lot of things at you all the time because we're following 16,600 symbols. So if you have that tool and you're trying to put together, you're looking for ideas, you want to buy the old analogy, buy low, sell high. So you want to find symbols that are breaking out of a base. If they're already moved up substantially, stay away from them. There's just nothing there. Sometimes not trading is your best trade. And that's one of the hardest things to understand. And that's why also we're showing you with the WaveTech tool how to build portfolios and build things much differently. And the portfolios will actually go to cash. They'll get out of the way. They're not a pie chart. They're a very dynamic strategy that will allow you to move in and out of assets and build capital. So once you learn how to use that tool for your to get your money to grow, then that's a huge thing that you can have. There's one thing about trading. There's another issue with managing money. All right, let's see what else we got up here. Yeah, another stock played out. Novartis, another drug company. We got last buy in a daily, 615, 5107, still long. Looks like we're trying to trade into that range of that same kind of volatility range like we're seeing a lot of these stocks. And you can see this is actually a really good thing to look at because I believe this is what the NASDAQ and all these indexes are going to end up looking like from that standpoint is we're going to set up these type of ranges where we're going to go sideways. It might make a new high. It'll hit the top end of the range and come back in. But this one, if you own it, you can continue to own it. This is a daily, so 10-day moving average 139.34. If we go over to a weekly graph, then what you're going to see here is this vertical move. And we did manage to close outside the band on the weekly. So we did have one lower close weekly. We've got a higher, we've actually made a new high in this move, but it looks to me that this is just going to be a crazy volatility. So this would be a likely good trade for like some kind of spread where you're selling calls, selling puts on the outside range of this thing, and you're going to suck in all the premium. All right. We're doing target. Weekly, got a trade on. PPMs are positive across the board, good upward trend. You can see the slope on everything. PPMs are still expanding, meaning that the trend is still coming alive. And this will keep this in a trend. The 10-week moving average, the magic number 120.58, close below that, then you might be able to head back toward 113, 115 range, but it's most likely going to stay in. Let's look at a daily and then we'll go to the next stock. Yeah, daily, got a little buy here at 120. It's up $4, working the range. PPMs are fading. The PPM 1 and 2 are both 0.20 and 0.22, so there's some decent stuff goes on. It is, from a range standpoint, it looks like it's going to be fairly stable. And this is, let me look at what model I have on here. Yeah, so these are 3-2 models, and that 3-2 model is capable of handling a lot more noise than the 1-2. 1-2 would be more aggressive on this particular pattern. Yeah, here's Lamb Research. Last buy 5.8, 252.06. Last trade 361. We're starting to press the lower end of the support levels, but it seems to be holding. We got PPMs are very robust, 0.52, 0.74, 0.7. So major support on this. We go to weekly, I'm sure it will look even more. Yeah, you've got the range. And this is, a lot of, like I said earlier, a lot of these charts look exactly the same because they've been driven by the same cash flow that we're seeing around the markets, the same rhetoric. what we're experiencing today with the Fed and everything else. You know, we're printing 32.62 on the cash S&P right now, and we're coming into about 20 minutes to the close. So I'm probably we'll go and watch. I'll do two more stocks, and then we'll watch the stuff go on. Let's do this though. Let's do the Dow. We're still continuing to hang around this 200-week moving average. We're slightly under 93.83. Last trade 93.44. There's a little tolerance there. I still believe this thing is going to firm up around these levels. If it doesn't, there are no current Fibonacci. Let me look at one thing here. Yeah, so there's no current Fibonacci stuff going on. We're looking at some downward pressure, you know, with gold up. Silver's flat on the day, so that's seeing some continuing profit taking there. But this Dow is pretty significant. I'm going to put a short trade on here. This was something that I talked about. I've just put out here. There's a short trade that came on at 96.64, but I'm going to cross a spectrum here, and I discussed this on Sunday night's video, that we have a short trade on a weekly from 99.67. There are no downside objectives right now, which are interesting that this pattern is not really generating any downside right now. And then if we go to the monthly, you're going to see we also have a short trade on a secular basis, which is right here at 97.65. So let's talk about just the implications of that. Then we'll go on and watch the close. I discussed this going back in the early March. I think there was a video, if you look back on the channel, that I did called Unintended Consequences, Unintended Socialism, which is what we're seeing here with all the buying of assets and all the support that the government's going to do. They have no choice, and I argue, you know, I've seen all this, I've seen some of this stuff as much as I can listen to it. I'm a big Ray Dalio fan from the standpoint of what his performance is. Now that he's this his public persona just makes me sick, because he's always talking down to us little people and what we should do. And it just, but you know, he's telling us that we're going into a depression. I don't think that's going to happen. I think in some, you know, the old story, right? If something about if there's a recession, if your neighbor's out of work, but if you're out of work, it's a depression. I think it's something like that. And so there are a lot of people that would argue there is a depression, so I shouldn't blow that off at that level. But there is this debasement of the currency. If the dollar continues to get cheaper, then it's going to make U.S. assets look fairly good. And it's going to, you know, maybe that's what's driving some of the real estate prices. Maybe there's some foreign investment thinking that the dollar will bottom and then it will come back. This is going to be really interesting. As a matter of fact, I'm going to do something here because I when I was doing my research for the videos last night, I thought about this, and I'm going to be going on. Yeah, I'm using the futures, Christoph, not the cash. So the but I want to show you something. This is very interesting. Let's go across the board, and I want to go to a weekly graph, and I just want you to see. This is the British pound. The Canadian dollar is next. Canadian dollar moving back to its underside of the weekly 200-day. Okay. We're going to the euro. It's close to its 200-day from the backside. This is the yen. It's hitting its 200. I said day, but 200 week. On the euro was 200 week. This is all weekly. And then even the Swiss is, they're above it, and they have some objectives here. And a friend of mine tells me that the Swiss will own the world. They own the currency market. So but you see monster acceleration. I'm going to go back through the spectrum again. We're going to look at, this is Swiss franc. This is going to Japanese. We're looking at PPMs this time. PPM 1 and 3 are turning up. PPM 2 on the yen is down. PPM, same type of configuration on all these as we approach this 200-week moving average. So let me make a point. And the point is this, is that as the dollar is coming down to its 200-day, all the other currencies are coming up to the resistance point. So this is truly an inflection point. And this one, I started to cover this in the video last night. I may still do something around this for folks that watch the videos that don't see the live streams, that this is a very significant place in time from a currency viewpoint. And this is going to be the big debate, and I mentioned this, the big debate is, what does it mean if the dollar continues to decline? I can tell you based on, I'm an ex-Merrill Lynch guy, okay? So Merrill Lynch is now Bank of America, and Bank of America is telling you that dollar's going down, and it's going to be terrible for U.S. markets and emerging markets, and those everything's going to move toward the emerging side. And if you want to know what's not going to happen, just use Merrill Lynch research. I used to work in the department. Just know that there's not going to be anything good about their stuff. It's mainstream. There's a lot of these firms that put out their rhetoric all the time, and so you can pretty much figure out that that's not what's likely to happen. So if the dollar continues to decline, guess what? The market is likely to go up, and that is going to be interesting, making U.S. assets cheaper, as I made that just talking about currencies here for a few minutes. And let's see what time we got. Yeah, about 10 minutes. I'll rattle on for another minute or so about this type of stuff. But this is an incredible moment in history, I believe, and we're going to have the answer certainly by the election on what this is. But everything moving, all the currencies of the world against the dollar moving up to their 200-week moving average, the dollar moving down to it. It's a little bit below it. The other stories you hear is, the dollar's very weak, so it's going to continue weak. Well, that's what the stock market looked like in March too, right? And there was some pretty catastrophic numbers that were being generated off of that market environment, and it became very obvious. And we're going to have that inflection point, and just setting up this currency scenario I just went through is going to tell you that we are truly at an inflection point, and that we're going to get an answer here. and what's going to be next. And I think the answer will be that these currencies will top out, the dollar will bottom. Please understand, I'm not predicting a bull market in the dollar. I'm just saying it's going to stabilize. And I've got some other theories that I'll talk about from the standpoint of what a stable dollar means right now. Because you have to remember back in around March 15th when the Fed announced that they were basically taking reserve requirements off, they were liquefying the entire economy. When they did that, they also doubled the currency base. So there's twice as many US dollars out there than there used to be. And I argue that it's to their advantage at some point to support the dollar. And I saw somebody on the channel or somewhere I was around that talking about, well, what would they do? Well, they'll come in and intervene and buy dollars. Now it's rumored also that there's a shortage of dollars, but it doesn't appear that that's the case. At least why are everybody trying to sell this thing? Everybody's selling this down against these other currencies. But I think we're hitting, long story, long answer. No one asked the question but me, but this thing is hitting that extreme point that we're going to see a reaction from. And one market we haven't talked about, which I want to talk about, and I want to bring up Bitcoin real quick, and then we'll watch the last 7 or 8 minutes of trading. Yeah, and I just happened to look at the line. Yeah, yeah, I would say Dalio is a China shill. He loves those guys. Anyway, yeah, so anyway, what we're seeing here on Bitcoin, this is a weekly, we got a buy signal on a weekly model. So when we get this end of wave tech, you would have known about this a little late, but there's other trades to come. 87.36, but if I flip over to a daily, and I talked about this, I think these high-end objectives of 17,000 new highs, 20,967, 23,000. I believe this big long base that we've set up going back for the last couple of years is the tipping point, and Bitcoin's going to go up substantially. It is definitely going to be put on it. Yeah, and yeah, I got to tell you, I'm going to try to set something up. I talked to a gentleman the other day that he knows all the junior miners really well. And I don't think it is too late on the miner question, but I just want to finish this whole thing. But the Bitcoin is going to go up. If we look at the daily chart here, this is what makes me sick because I've been trying to get this crypto project off the ground. And I got to trend just over to 1.2 here. 1 second. So 1.2 came in with a buy at 93.67 on 7/21, which was 8 days ago. We got that buy. And I remember talking about this last week and that this buy was likely to be a good one. We've already moved up to the 11,000. What's the high? 11,300, 11,295. This is just the beginning. Most likely we're going to see these ranges up here at 11.7, 11.8 is the next magic number, then 13, 13.2, 14, 13.2 to 14 is the next move to the upside, and we should consolidate. If you notice the market grid has went into that flat square mode, so that's where it's at. Let's see what we got on time. 6 minutes. Let's go and watch the chart here. We're seeing some selling. Let me look at something here really quick. Yeah, we're seeing some profit taking as we come into the close here. I would suspect we will see a continuation of some selling going on here as far as this goes. Yeah, so I don't know what to expect here, but I would expect that we will see some selling of this thing. We're at 46. What was the high? High was 57, so we're 10 handles off the highs right now, and we just printed the highs not 20 minutes ago. So there's definitely some selling. We'll see if where it firms up at. Um, yeah, so I'm just looking at some of the things on the line here. All right. Yeah. I don't know if this, we may go back and just chat a little more about this other stuff. There's not, I was hoping for some activity. We've got 3 minutes to go. It's pretty stable. One of the other things that if you went back and watched some of the videos, especially in April, maybe late March, mid-March, one of the things that we have right now, if you look at the far left-hand side of the screen, this is the level 2 trading, and this is absolutely the most liquid markets that I've seen for a while. So I talked about earlier on when I was talking, we have seen a normalization of market conditions, and I think this has actually run off a lot of traders, or maybe some of this new money that came into the market's already been churned up. It's very possible. But what we're seeing here is a stability of volume, bid-ask size, the thickness of the market, or the liquidity has come back. Back in April and March and April, there was no liquidity. For instance, we're seeing 200 on each side of this market on the bid-ask, and we didn't see those kind of numbers. We were seeing 3 and 6 and 10. To get 200 contracts, you'd have to move 200 and 300 points, and that's why we were seeing these monster 1,000-point days on the Dow Jones, and 150, 125 handles in the S&P. So that's also why we're seeing 18 handles. And today we expanded a little bit because we have some news that obviously with the Fed and the announcements come out. But it will be interesting. We've got a ton of stuff coming out here in just a few minutes. It's the final minute of trading here. And you should see some interesting action right after the cash closes. And see what kind of the futures traders, see how they square these things up. We're about 30 seconds out. A little bit of buying coming in. Those last few institutional orders coming in. And that last 10 minutes of trade, folks, this is where a lot of the institutions, mutual funds, ETFs, everybody's squaring up their books right here. Okay, that was it right there. There we go. Now we're resume trading. We had that little hesitation, and we'll see. This next minute or two could be interesting. Yeah, I'm just looking at what's going to be released on earnings after hours here. See if there's anything that just stands out. Got ALGT. Yeah, there's nothing going on in this futures. I'm going to go back over here and just put in a couple. We got Allegiant. This was a great trade that we did back in May. This was to take advantage of Warren Buffett's mistake trade that I put out back in May. That was perfect. Went right up the 200-day moving average. Now it's hovering below this. You're seeing PPMs roll over. Not a lot going on here. And I actually have two models on here at the same moment. Let me clean this up. Yeah, so this is that trade back in May that came on at 75.41 on 5/8. That darn thing is still long, but as I told you folks, if you got to that 200-day moving average to take it, the 200 moving average peg was the average was 137 when it got hit. It traded 139.68, so they gave a great opportunity, just about a double on that one. That was one of the beauties. But they're releasing earnings here in a few minutes. I'm just looking through the list of stuff that's coming out. Yeah, tomorrow's going to be the really big day, it looks like, as far as that stuff goes. Let's see if there's any final questions as we wind this thing down. Yeah, so Facebook is out. Is that right? Up 130. So what is the symbol for PayPal? Why don't I know that? Yeah, let's bring. All right. Yeah, somebody asked, is Bitcoin follow the US dollar? Right now, it looks like it's following the Swiss. That's it, thanks. That was close. Yeah, there are some objectives here. This is a daily. looking at high target 196 minimum on this move, 208, 216. And you see PPMs are all breaking out, so that's pretty good on daily. On a weekly, we're trading at the weekly extreme here. 185.07 is RXT weekly on PayPal, and we're 185.07. Yeah, I'm trying to figure out how to get the watermarks on the spread charts. I'm trying to figure that out. Unfortunately, they don't put it on like they do on other symbols. I'm not sure why. It would be nice. And I'm trying to figure out how to put them on the videos. I'm working on making a graphic overlay or something I can put on there so you folks will know what they are when you watch the videos. All right, I think we're pretty much done. We try to finish right after the close. Sorry for the delay today, and I'm going to get Charles set up so we can get some trades out and just really set up a trade like on how we're going to do stuff on bringing in these trading ideas. So anyway, folks, thanks for showing up. I think we looked like we had like 3,100 hanging around at one stage or another, so that's pretty cool. Appreciate all the work. I've got another video coming at you tonight. We'll see. I'll digest all this stuff that Paul said. I'll go back and watch all that, just get a feel for what he's doing. Obviously, they kept the market pretty pumped up. We closed above that 45 number on the cash S&P just to close out. There it is. The high 3245.76 was RXT. We closed 3258.44. And momentum's not hanging around, so that could be an issue. We'll definitely talk about it tonight. And thanks, folks. I really appreciate it. Just at the end here, folks, if you haven't signed up for this WaveTech tool, you can get in for a couple days really cheap, and then we roll over. It's an auto pay. It's 97 bucks a month. We follow 16,700 symbols. We put out trades on everything. We show you complete transparency, targets, all kinds of stuff. So if you've been on this call today, you enjoyed it, smash the like button. I'd appreciate it. I saw somebody do a super chat earlier. I thank them for that. And we will continue to do these things. They're a lot of fun. Yeah, right now, Juan, we have just the videos going on out there. There's a manual in the there's a manual that I have that I'm working on updating. It's just with everything else going on right now, it's been pretty hectic. So I'm working on getting that taken care of. Yeah, Juan, if you go to, I'll put this in the in the line here, but if you go to the URL Portfolio Expert, no E in expert, and you go to support, you'll see videos there for WaveTech. It'll walk you through. You'll see a fair amount of things there, but we do need this quick start guide to get you up and running. Yeah, it is. Yeah, there's a lot going on in this product, especially with 16,000 symbols. And what we're working on is showing you folks how to actually pick your own little universe. Back in my floor trading days, a buddy of mine used to always say, "Go, man, this market looks terrible, but my world is fine," meaning his universe and the trades he had on were under control, but the markets weren't. And so that's exactly what we're looking at as far as utilizing the product, is that you will you'll get overwhelmed if you try to understand all of it, but there's plenty of stuff there just to be able to digest and go through the WaveTech meetings. Yeah, that's all long. It takes some time and all that stuff. So just yeah, no, the portfolio manager, I appreciate it. Holy Grail. I like that. Yeah, Richard, thanks. We're still figuring this out, this whole YouTube thing, and the good news is I enjoy doing these. We usually pick up a lot of new clients for WaveTech on Tuesdays and Wednesdays. They're good days for us, so we're glad to do these things. We want to educate. We want to do these things. Jay and I, Jay's my son, obviously, and we've been hanging around doing this together for a long time, and this is everything that we really want, is to be able to educate and show folks how to make money. This goes back to the very first launch of a product called Market Mind, which were the same models, believe it or not, in 1992. These things have stood the test of time, and the same models go back to the Market Mind and WaveTech, all this stuff. WaveTech actually dates back. I dug this out of the archives. WaveTech is actually a 1986. I used to have a newsletter that I did called the WaveTech Analyst, and that was originally distributed by me, and ultimately a regional firm had bought the operation out and distributed it to 40,000 customers once upon a time. And I even carried this over into for a period of time into Merrill Lynch Research back in 1990. So there was a lot, and after that I actually did a newsletter for just large banking institutions called the Daily Fixed Income, or Daily Quant Fixed Income Report, and it was all the same stuff. But anyway, really want to thank everybody. It's been a great experience doing this channel, doing everything that I've been doing, bringing the product out to you folks. It's been really, really awesome. So anyway, we shall see you on videos tonight and tomorrow night. And if things were to get crazy over the next couple of days, I will light the screen up, spend an hour or so just talking about what's going on. So thanks again for watching, everyone. We'll talk to you tonight.